Hey everybody, I want to talk about my favorite bank stock to buy for 2025, and it is Ally Financial. In past years, I generally give one bank stock because it's my area of specialty. It's what I started at the Motley Fool doing years ago. Um, and I give one bank stock that I think is going to be the best pick for the current year. And I've had some success doing that. So for 2025, I'm saying Ally Financial is my bank stock to buy for this year. Ticker symbol is ALLY. If you haven't heard of them, it's probably because they used to be part of General Motors a long time ago. They were spun out from General Motors in the wake of the financial crisis when GM went bankrupt. So Ally Financial, ALLY. Before we dive into Ally, I'd love for you to take a look at the link you see on the screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. It is the best way to support these videos I make on YouTube. Again, fool.com/Frankel. Please check it out. And please hit subscribe to my channel if you don't already. So let's dive right in. I want to share my screen and talk about some of their latest results and developments and why I like them so much for 2025. So this is just kind of a 5-year chart of Ally's results. So, starting in 2020 to 2024. And at first glance, this might sound horrible. If you look at, total revenue down here, it's been roughly flat for the past few years. It actually declining a little bit. But if you compare, like, say, 2021 to 2024, revenue is essentially flat. It hasn't really gone anywhere. If you look at income, it's another story. This top line is net income. It went from $3 billion in 2021 to about $558 million in 2024. Now, Ally is primarily an auto lender, which might not be surprising given that it came out of General Motors. But when you think about what was going on in 2021, there were kind of two big things that made this big of a difference in its profitability. So number one is that interest rates were next to nothing. In addition to being an auto lender, Ally also is a big deposit platform. They have an online bank. They have a banking app that has a checking account, savings accounts, CDs, investment platform, and a bunch of other things. And their savings accounts weren't paying much, so they had access to a lot of low-cost money. Right now, they have to pay about 4% interest just to attract deposits. That really cuts into their profit margins when you think of, what if you're getting 8% on an auto loan and paying 4% interest on deposits. That's a lot different than if you were getting, say, 6 or 7% on an auto loan and paying 1% interest on your deposits. So deposit margins have shrunk, and also everybody was buying cars in 2021. There was a surge in demand, a lot of supply chain disruption, so people were willing to pay a lot more for cars. People were paying above sticker for the average car sale for the first time in my lifetime. So demand has kind of gone down as interest rates have risen and margins have compressed as well. So those are really the two big reasons you're seeing that. So adjusted EPS, if you look at the current share price, is about $40 a share. Ally earned over $8 a share in 2021. That's not normal. That was not a normal year in interest rates and vehicle demand and vehicle pricing, anything. So in 2024, it's more of a normalized environment. It's still a highly profitable business. The stock trades for well under 20 times adjusted earnings, which I think is pretty attractive. But there's good reason to believe that things are going to turn around in the next year or two. So we just look at some of the highlights for 2024. So all these numbers, I pretty much read all the revenue numbers and stuff like that on the previous slide, but the messages are the big deal here. Number one, they're really pivoting to their core franchises, which is a big thing. Ally's kind of evolved into more of a full-featured financial ecosystem. But the core of the business is the dealer financial services. That really is. If you go to buy a new car, you're probably going to and ask and talk to the finance guy at the dealership. Ally is probably their number one financing partner. They're the number one auto lender in the U.S. for new car sales, and that's the franchise they really want to focus on, and their deposit platform that I mentioned. because that provides low-cost capital to make auto loans. As part of that, they're going to get rid of some of the other parts of their business, specifically credit cards and mortgages. Um, Ally's mortgage business is very small, and it's going to stop accepting new mortgage applications at the end of January. But that's a high quality kind of lending. But again, Ally is primarily an online bank. If they're paying 4% for deposits, loaning money out at the average 30-year mortgage rate of 6.5 to 7%, it's not that great of a business. Ally's credit card business is the one I'm really excited to see go. I like the credit card business. I'm a fan of it with other companies. I own shares of Capital One, for example. But Ally's so good at auto lending, they don't really need to branch out to anything else like that. Credit cards, it's an unnecessary risk in my mind for Ally, and I'm glad to see them monetize that part of the business and let it go. And it's really not even going to impact them all that much this year, as I'll talk about in a minute. But just auto loans are looking really good. Notice that all these charts conveniently skip that 2021, 2022 timeframe when the market wasn't normal. But if you just look over time, this is like every few years. Ally's consumer auto applications, they're steadily growing their market share in both auto finance and insurance. They have an insurance business as well. The average auto loan has a 10.4% yield that they're originating right now. And they do that with high credit quality. Their average customer has an above average FICO score. So the core business is doing really, really well. A lot of room to grow still. As interest rates fall, it could create a nice demand tailwind in the core business. So I'm really not sad they're getting rid of credit cards. The Ally credit card wasn't that much of a differentiated product. It's not, I'm not really sad to see it go. But if we look at this, we're already seeing the effects. And one of the biggest reasons I like Ally for 2025 is that I think margins are going to expand significantly. And we're already starting to see that a little bit as deposit costs come down. So between the third quarter, which is when the Fed started cutting rates, it's right here. I'm going to read these to you because they're small print. In the third quarter, Ally's deposit cost was 4.23%. That's what it was paying on savings accounts, things like that, CDs. In the fourth quarter, that had come down to 4.01%. Now, in the first quarter of 2025, it's going to be even lower because remember, the Fed cut rates in December. That's not totally reflected on the fourth quarter numbers. So deposit rates came down a little bit, and we already saw the net interest margin tick up by 1 basis point. That should continue, and I'll get to Ally's 2025 outlook in a minute. But I think there's a lot of interest margin expansion to be had here. I'm really glad to see them get rid of the credit card business, as I mentioned. One area of concern to keep an eye on is net charge-offs. If the economy takes a turn for the worse, this could take upward. Right now, the net charge-off rate in the business is not anything that's that alarming. A little over 2.3% of auto loans on an annualized basis are charged off. I mentioned the average loan Ally originates has a 10.4% yield. So, do the math between that and 2.3%. There's still a lot of room for margin even after paying the deposit cost. And it's well covered by the company's reserves. So I would not worry too much. You can see the credit quality is going up over time. The average credit score of an Ally customer has gone up from 688 in 2022 to 712 now. So credit quality is improving over time. They have plenty of money in reserves. I mentioned the auto charge-off rate was a little over 2.3%. They have almost 3.8% of their total auto loan balances in reserves right now. So plenty of money in reserves to cover any losses in the portfolio and then some. So I'm not too worried about that. And then finally, the 2025 outlook. You can see in 2024, net interest margin was 3.3%. I mentioned it ticked up a little bit in the fourth quarter. Even after getting rid of the high interest credit card business, Ally's expecting 2025 interest margins in the 3.4 to 3.5 range. That like 10 to 20 basis point difference could make a big impact on the bottom line of this business. They have a lot of auto loans on their balance sheet, well over $100 billion of loans. So that little bit of margin difference could make a big impact on earnings per share. They're not expecting any significant change in the net charge-off rates, so that's nice to see. And the corporate tax rate here, I mentioned this earlier. Ally's corporate tax rate, they're expecting one in the 22 to 23% range. The president campaigned on a 15% corporate tax rate. That would disproportionately help the banking industry, and Ally is certainly not an exception. So that could be another tailwind, even if it doesn't happen in 2025. If it happens in the next few years, that could be a lot of help. Or even if it looks like it's going to happen, that could be a big help to Ally. So again, Ally Financial is my top bank stock to buy in 2025. I think it has a very bright future ahead of it. Let me know what you think. I'd love to hear your thoughts, and I'll do my best to answer any comments individually. And be sure to check out fool.com/Frankel. Thanks, everybody. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.